Yo, ChatGPT really be bugging the shit out of me in the morning, not giving me the templates that I need to do what I need to do. Alrighty, I got what I needed done. Alright, guys, give me 2 seconds here. Let's get this going. Alrighty, markets are crazy today. Remember that we had a crazy news day today. Unemployment rates were dropped at 8:30 a.m. Markets are pricing it in. Traders are saying that this is a good sign that we're having a decline in unemployment rates. That means that less people are unemployed. People are actually going to work. Amongst this, we have a FOMOC member. Schmidt speaks right now. Bowman also speaks, but this is going to have a low impact event on the rest of the market for the rest of the day. It doesn't really look like we have any major impact events, but we are warming up into the next 24 minutes of the market being open inside of the United States. As you can see here, from the market open of 9 a.m., we already have a 200-point move, now meeting the resistance at MNQ. This is a very important thing to look at every single morning of where we're at in terms of movement before taking a trade. We've already moved 200 points up, now above the VWAP. Remember that in these kinds of scenarios, we want to stay patient on our entries, especially when it comes down to the markets, to not get into a position that is going to cost us money. Now, when we look at this as a whole, I want you guys to take a step back from the markets and not rush your position, right? So every morning we remake our levels. We do that from a top-down approach. Once the top-down approach is kind of handled, what we then can do is take a moment to take a deep breath, because the markets are going to do what they want to do. So if we're not paying very close attention to the story that it's trying to tell us, then we could miss something that is ultimately very important inside of the trading day. Now, in this case and scenario, right, what is the trading day going to tell us today? We have to pay close attention to the market's story. We're already 200 points up. We had our news already came out at 8:30. That's why I tried to get on time every single morning, but I've been battling ChatGPT just to get a stupid thumbnail, and it bothers the hell out of me when I can't get, the right thumbnail posted. So I don't have consistency inside of my YouTube channel. It's just way too... My OCD will never let me post it if it's not all organized the way it's supposed to be. Okay. Just post this live here. And we're good to go. Okay. So, inside of the markets today, we also have to look at the tech stocks, which are moving, right? 9 a.m. or 5 a.m., these buddies start to move. So as you can see here, Microsoft, moving flat from 5 a.m. to 8 a.m. The news kicked off at 8:30. You could have traded this first candle, and most of us could have been done with trading already if we wake up early enough in the morning to get inside of these trades in and out, right? It is possible to do such a thing. It is possible to get your money at 5 to 7 a.m. as well. We call these ones gentle movers in the market. So every morning we have these gentle movers that come in. You can make your money, get out in the first 2 hours of the market by just doing a top-down approach, getting your levels, setting up your multiple time frames, putting everything on Heikinashi candles, and reading the wicks as they come in, watching the top tech stocks move. Now, this flat price action in the morning is not ideal for most people to make money, especially those more experienced traders who are trying to hit it big and maybe even trade once or twice a week. But it's not a bad market to get your feet wet in and ultimately make a good trade, right? So at the end of the day, what we're trying to do is we're trying to make good trades based upon the data that we have and ultimately get in and out of the markets. I'm only buying in this position because it was another position now making a higher low inside of this area. I'm going to wait until 9:30. I'm probably going to close this even a little bit earlier than I want to, but it's a higher low being made on Ethereum. I don't want to get faked out, so I'm only going to $40 small position, and I have my stop loss set at the base here at $100. So I'm just targeting a nice 2-to-1 ratio here on a higher low on the 1 hour time frame. All right, so next thing we have inside of the markets. Now you see that price action is meeting resistance at MNQ. What's going to happen next? Well, if the markets open up in 20 minutes and volume starts to kick in as it did this morning at 8:30, well, the truth is that we're going to have a large amount of buying pressure that's going to step inside of this market and try to put it over the hose zone that we have right here. This is the hose zone that we set yesterday. This is the zone that we don't trade. Every single morning what we do to make sure that we get these levels correct is we should put the levels on our candles function, right? That's in the top corner over here, our candles function. We delete our yesterday's levels. I know it's painful, right? We got to do this every single morning, but this is what makes us successful traders. We delete those old levels and we look at to see what our horizontal ray can hit for today. Remember that we look at the day's range. So today's range is about $300 or 300 points. 300 points is equal to $300 inside of the market. We can use a hotkey, Alt H, and it will be able to make us our levels a lot quicker inside of the market. Remember, our goal inside of the market is to touch as many bodies, top of the wicks, bottom of the bodies as we possibly can in the markets. That gives us our best confluence level inside of trading. We want 2 levels above, 2 levels below, and that's going to be right here today. Right? See how quickly I did that? And I can check my levels by bumping down to the 15-minute. I look to see, okay, price action stops here, price action stops here, price action stops a little bit before here. So what I could do is make a micro adjustment, then check it along the graph, moving it left and right, seeing if price action agrees with that level right there. It seems like it does. This one even came halfway through the level. Maybe I can squeeze in a little bit more, but as you can see, price action has a lot more data inside of these large clumps, so that these 2 levels above, these 2 levels below support a very beautiful picture for us, so that we can see a level-to-level trading structure that ultimately is going to net us the most money. Remember that I use templates as well. Templates are extremely valuable, as traders will often use these to save time in charting and having to type everything out. Do you see how quickly I'm doing these things? Because I only have 17 minutes in the market to get all of this situated on MNQ. I only trade 1 ticker per day. I don't go and bounce around in 10 different tickers if I'm a new trader, right? Now let's take a look at Mez, okay? Oh, we forgot to do one thing. I forgot to set the hoe zone. The hoe zone is an area of trading that we do not trade in. Now, at this moment, if we break underneath the resistance level here, I will get pretty excited for shorts. If we pull back to this level over here, then what I would be really excited to do is take my first profit. That's very simple. Right now, the structure is pushing bullish for us inside of the first 30 minutes of the market. So we're not going to go ahead and just get excited to go short here. What it looks like is price action is continuously pushing up into a higher high. And if it can break this level right here, what we call that strategy is a knock knock boom strategy. It's knocking twice at resistance. This would be the boom candle. We would want to see pushing to the top level of 25,666. I don't like that level, so I'm going to change it just a bit. I don't like 666 in any of my levels. I feel better at that one. So I'm going to make it a nice clean level. 26,050. Perfect. Just double checking it just to see if I can get away with that, and I can. Okay, I don't like that other number that was to support of the devil, so we don't need the devil's numbers in our trading charts. All right, Mez, another important indice inside of the market, which is the SP 500, right? This is a micro ticker inside of the market that essentially is utilized in terms of a future contract. Futures contracts are open 23 hours a day, 6 days a week. That's right. That means that you could trade this ticker almost every single day of the week, which makes it the closest thing to trade to cryptocurrencies. That's what makes futures contracts literally amazing. And a lot of people will make a lot of really good money with futures versus trading options because it symbolizes a non-Greek using a form of leverage that you can use in proprietary firms to essentially get funded. And that's amazing because you can basically not use your own money. Anybody who says that, hey, I don't have, $50,000 to trade or $25,000 to trade, well, proprietary firms cost you like $100 to try out their firm and ultimately become successful at trading without using your own money. Now, I'm not telling you to go and use a proprietary firm, but if you guys need to little boost and try to get your feet wet in trading, there are many different proprietary firms that you can use in order to get funded. All right, so I've logged into my trading decks. We have our levels here inside of Mez, which basically since yesterday, we have been pushing over the top of the long levels at 69,964 or 6,964, which looks like it's kind of teetering out, and it does not, from a bigger picture, look like this is a really strong rally from what we've already come from, which is the lows of 6,769. We've already pushed up 200 points, which is a major move on SPY. Now trading inside of a flat price action. You can see since this morning, it did not give us that real big push that we were looking for and expecting into that top zone of exhaustion, which right now, if we don't push into this level of exhaustion, then I really wouldn't be excited to get into sort of any trades for the day. The news is and already has went, so right now my main focus is just going to be inside of Mez, which is much better looking chart. Commodities, let's take a look at side of commodities right now. The long levels were hit over yesterday. I liked the buy at the 5,017 level, which was XAU. It pulled back into an area for us to be able to go back long, but then corrected immediately back to the VWAP and then underneath it to fake out a lot of traders. So the markets have been extremely messy for a lot of traders, especially the newbie traders. Not a lot of people are making money in sideways markets because of all these fake outs. Silver, same thing. We had longs over 82. We're still in profit for now. for now, I would say very, very calmly that, this chart's not a sexy looking chart to keep these longs. We would want solid price action, continuously pushing up the 96. Remember, I told you banks would become insolvent at 125. After Venezuela, they let retail pile on, retail pile on, retail pile on, and then they dumped supply inside of the market, pushing price down lower, and that's just the way it happened. And if you don't believe me, then we'll go do your homework, because honestly, there's many examples and also evidence that they did that through financial statements at the end of Q1. So Bitcoin is another major player inside of the market that we do and try to trade the charts. Right now, it's not turning out into a really pretty looking chart because we're still making these lows without breaking out of a higher high, right? So we reached that 59,000. We came back and it gave a nice little relief bounce of $12,000, $13,000. And now we're kind of progressing back into a higher low, which makes it almost look like we're going to do a double touch at that 59,000 before anything is decided in terms of price action. A lot of these cryptocurrencies are already on deep discount. It's very evident when you look at prices like Sui at 92 cents. This is a better overlook for me. Blue 2 cents. Sui 91 cents. Let's look at some of the top ones. Solana at 82 cents. This is almost half off of what the original price was. BNB half off of what the original price was. A lot of these coins, you take these moments to literally dollar cost average your position. So a lot of you might be red on your portfolio in certain places that you've gone long. Take this moment to throw some cash inside of the market. Not all of your cash, but dollar cost average a lot of your positions down so that you're able to take advantage of the barbell curve, the inverse barbell curve that is happening right now. You buy a little bit at 68, okay, it goes back down to 59. That's fine. You have cash on the side. You throw a little bit more at 59. If it goes down to 49, same story, different price. You throw a little bit more cash. This is a dollar cost averaging strategy. It's one of the most profitable strategies that have ever been used inside of the market, paired with time in the market. Time in the market has always proven, ask any investment advisor, any financial advisor, although they might have a literally cream cheese inside of their head, they are going to agree with me on this. Time in the market has saved so many accounts. Okay, so you're utilizing time in the market by buying more on a buy plan strategy. So you buy a little bit here, buy a little bit here, buy a little bit here. On the way up, you may buy a little bit more. So you're dollar cost averaging your cost basis down and ultimately giving yourself the best chance at making money in the near future. That's the best thing that I can do for you guys if you don't actively trade every single day. Now, we do need to make our levels on MNQ to make money today. So where are the levels? What are we going to do to make money? What is the long level? What is the short level? Well, I kind of really like this support and resistance right now. As you can see, volume literally died down the last 5 minutes in the market. So literally nothing is happening from right now to what happened when we had that news at 8:30. Traders already priced in the trading data that was given to them at that moment. That is why it is important for us not to trade what we don't see in the markets, right? So a lot of new traders, they're often probably going to get into long positions right now. Let me explain to you why that's a mistake. If you were to get into long positions right now, and let's say the market's opened in the next 7 minutes and price dumped completely, right? You would get stuck in a position where one contract would cost you quite a bit of money to hold through that first froth candle. The froth candles inside of the market are simply as such. Volume comes in so rapidly because of retail that is buying and selling at the same time. It often stretches price action in two separate directions, creating volatile wicks that often search and destroy stop losses. That was created by a system of market makers that know how impatient you are. So what's the key? What is the secret here that you can put inside of your trading strategy that makes you successful? Well, it's very simple. All you need to do is be patient. Patience is going to net you more money in this market, because ultimately you're going to realize, I don't need to make a trade. I want to make a trade, but my wants and my needs are often corrected by the patience that I give myself to making the best opportunity possible when it presents itself in front of me. I can almost guarantee you, and we'll sit on the charts for the first 5 minutes, 10 minutes, because I kind of do like doing this live trading with you guys as well. It helps me become more patient as a trader as well, and talk myself through these trades, so ultimately you guys can see my process as well, and showing you guys how much self-control I also have inside of the market by making the best decisions possible, right? So the strongest levels today for MNQ is around this 25,300 level, right? We're going to call this an equilibrium level or a pivot level inside of the market. Now, you can't have these charts without these kinds of levels, these pivot levels, because ultimately there are a million levels everywhere inside of the markets, right? Everywhere inside of the markets every single day. That's why the market presents us unlimited opportunities. Okay, so if I make this as a pivot level and I say to myself, okay, what I'm going to do is I'm going to try to trade this box today. I'm going to try to trade the Ho zone, because that's what basically we've been trading, is almost like very sideways price action. And if you were getting into trading and this was something that where you could make money in, why wouldn't you, right? So here's a pivot level. If we are trading between $25,415 today to $25,185 today, ultimately we would want to see the breaking down of the 25,415 level and trade it 100 points to that pivot level. At that pivot level, what you're most likely going to get is a strong support. Support could easily be flipped to resistance if we broke through that level, and the next found support would be 25,185 as a very strong level for the day. It's very simple. The price could even come and test a little bit higher, right, and get inside of this 200 level. So test another 100 points inside of the market, right? Because MNQ, we all know, if you've been trading this for a while, it loves to trade 100 points in the market. A lot of traders target 100 points. So it would make sense that that's where price action would fall. So we're going to wait patiently here for the next 3 minutes in the market, right? We're going to see exactly how the price action opens up on a multi-time frame setup. Remember, when I talk about multi-time frame setups in the market, it's simply just 3 different time frames that shows us the broader picture of how we are supposed to trade these markets. On my separate screen, I have my trading decks open, okay? They are ready to make a trade, like a lion ready to eat his food. Right? So I have both of my trading decks open. I got MNQ open. Now all we need to do is be patient for the next 2 minutes. And at that time, I'm going to quickly set something up. right, guys, we have 60 seconds until the open of the markets right now. Remember, we're staying patient. The key word is we're staying patient here, right? There is no need, no point to go quickly inside of the markets. Our goal is to make the best trade possible, okay? Right? That's all we need to do. We just need to make the best trade possible. What did I say? The open is met with the first candle, which is going to be volatile. There is no reason to rush trades here. We can just calmly say, if price action stays above this resistance level, price might continue to the top of this resistance level. If we push back down to the pivotal level, we might have a good opportunity to get a reversal trade. Volume is kicking in right now. It is coming in green, but look where the volume stands in relative terms, right, to other volume candlesticks down here at the bottom. If I maximize this chart specifically and look at volume, what we're looking for is larger volume candlesticks like this. Look how the first volume candlestick of every single morning is usually the most volatile. It pushes price action the most. So what we can see here is this is not the candlestick to make a move on. It is barely cracking, and that might change in the next 5 minutes. But for right now, we're staying above that resistance level, which is a sign of bullish price action. What we want is to stay above that level, to continue having a bullish outlook inside of the markets. Oh man, that was cold. It is cold in here. Okay. Look at that volatility, right? This is why, specifically why I said, just be careful, don't trade the first 5 minutes of the market. Message. Let's pull it up. right, needed to concentrate there. All right, so these are going to be my levels on gold today. The yellow boxes are going to be areas of confluence and interest inside of here, exhaustion zones inside of the market. As you can see here, we're between two exhaustion zones for support and resistances in the market. I'm going to post this to X. Okay. If we pull back to this entry, I would consider taking positions. If we pull up to this entry here, I would consider taking a position long. That's a better level right there. Much cleaner. That's not good. Looking good. Staying patient through the base there. Markets are turning down. Might exit that position. Solid pullback, kind of what to be expected inside of the markets. Gonna get rid of the hose zone as we already talked about it. Tech stocks right now, Apple's up, Amazon's down, AVGO is coming up, but it's very choppy. Google's coming down, Meta is going down, Microsoft is coming down, Nvidia is coming down, Tesla's going up. So very, very divided market today. I see a lot of green. I see green 1, 2 red, 3 red, 4 red. Okay, so we have more stocks that are coming in with red volume. So selling pressure volume. It's favoring shorts today. As of right now, nothing is changing in the market. Curious to see what Pittman is doing. Wow, pushed really far up again. Unfortunate. I'll wait until it hits this level here. See if I can get in another short. Part of my mean reversal strategy. Be patient there. Choppy the markets are. If you took that trade this morning, it was not much of a move. I mean, this is a 50-point move this morning, but you would have had to take that first 5-minute candle. It doesn't lie inside of my trading strategy to do such a thing. But there are traders who took that first candle for a 100-point move down. Story isn't really changing on tech stocks. So I mean, we're coming up here and we're only holding really because Apple is holding and Nvidia is holding. Oh, now AVGO is deciding that it wants to come and put some green, put some buying pressure. So now we have literally a divided market on the top 8 tech stocks. 4 of them are coming down. 4 of them are going up. Not really an A+ setup day, if you ask me. We're looking for a unanimous trading decision inside of the markets. So all the tech stocks are agreeing for us to really take a trade. This divided bullshit it's not going to do it for us. Interesting. Meta just selling off all of its gains this morning. Touched that resistance at 678 and then just came right down. Interesting. Look at the chopping that's going around inside of the markets right now. This is best why we set our alerts. But if we can get a double tap here, right, where markets are breaking inside of this area and this resistance is becoming a hard support or a hard resistance level where price can't break above it, which that's what it's looking like it's happening, to be honest with you. We put this into Heikinashi candles. You can see that the flat doji indicates price action is neither favoring the bulls nor the bears in this scenario. So if we continue to keep doing that, the story might actually change. That bullish price action that was given to us early this morning could be just a short-lived rally, and we continue the overall trend, which is down. The story right now on the tech stocks is kind of changing because we went from selling off to now Amazon looks like it's getting some buying pressure. AVGO looks like it's getting some buying pressure. Meta is getting some buying pressure, and Microsoft is getting some buying pressure. As a trader, you have to stop and take yourself back a level here. Everybody wants to make money in the markets, but do you know where to make money and how to make money is the question you always got to ask yourself. Because the truth is like, how many times did I just flip-flop between, oh, now it's bullish, now it's bearish, now it's bullish, now it's bearish? As a trader, do you really want to be like dealing with that kind of emotional hot pot? Because that's what the market is sometimes. It's just an emotional hot pot that it often flip-flops between these two buying and selling natures that makes it difficult for us to know where to make money. Often days I don't have a trade to make, even though I try to make one. This would be a perfect example of one of those days. The overall picture for me is it's pointing bearish. The tech stocks don't really agree to it because there's buying pressure that's stepping in, then selling pressure that's stepping in, then we have all of the tech stocks that are divided in relative terms of where we're going to make our money. We're already 30 minutes, almost 30 minutes into the market. It's about 21 minutes. If our 5-minute chart, I guess, closes below the EMAs, we could take our short here. Where are we in terms of the EMAs? But on the 15-minute, we're already above all of the EMAs. So 5-minute, we're just below the 9 EMA, battling between the 9 and the 20. That's a very indecided move. I don't even need to pull it up on the 2-minute to know that we're underneath the EMAs on the 2-minute. See? The only thing that we haven't cracked is that 50 EMA, which on the 2-minute, I wouldn't really put that as a variable or an indicator. You know, the VWAP would be a stronger indicator on the 2-minute. So we're showing bullish price action right now, bullish price action, bullish price action. So we're not near really confident level shorts right now, but at the same time, this selling off is not giving us high levels of confidence to go long. This is where traders just have to stay patient through it. Bump to see if there's any real news. buying the dip, follow the money. Gotta use the restroom. Yeah, I might out this trade. Not a good day for crypto. Now we're starting to see a bearish price action step into the markets. I would like to see a pullback on NAS. If we can get to that 25,300 level, I would be interested in getting in a reversal. There you go. Started to break down. Let's see what happens when it gets to the VWAP. Might get stopped out of ETH. That's gonna be my stop. Touch and go. Look right at that 300 level. I'll stay patient through it. I want to see how it closes in 2 minutes versus getting into that position prematurely. 25 points is nothing. Nothing in the markets. Back at that entry. That's why I said be patient. Tech stocks are now starting to align short for shorts. Didn't get stopped out on ETH. Wow. Charts are favoring shorts right now, so it's taking everything from me just to sit and be patient through this, because my money is not usually made in shorts, but unless it's shorting meme coins. So what happened to that pivot level? Look, 300, battled, now above 40 points. My levels were there. You could have taken a small little chunk of that, and ultimately taken a little bit of profit. It's not really aligning to my trading strategy today. Take a lot of patience just to be inside of a trade like that. A little bit more risk than reward for me. I wouldn't be surprised if we get a pullback here, but then again, it could just shoot back down to that lower support level of 25,200. So for me, I'm just staying patient rather than taking a trade. Everything is pointing bearish, to be honest with you. Yeah, looks like we're gonna get continuation. There'd be absolutely no reason to get into longs right now. Below the VWAP on the 2 minute or the 1 minute, below the VWAP and the EMAs on the 5 minute, crashing below the EMAs on the 15 minute, no reason to get into longs right now. I did say at the resistance at 25,415 and the tech stocks were all pointing bearish for the day. I walked you guys through that trade as well. I just didn't take the trade because it didn't align to really my strategy. I don't really love seeing the 6 out of the 8 tech stocks. I want A+ setups right now. I'm trying to pass one account and then actually make a paycheck on the other ones.
Field.
I'm just interested in seeing a test trade here. That looks like my stop loss on Bybit.
Field.
Yeah, I don't really love that. Gonna exit the trade. I'm gonna wait until we get to that 200 level. I think we break down into this zone down here. Continue the sideways trading, honestly. Gold is pushing up. Oof. Ugly. Ugly. That's a 200-point move on the shorts. There goes that support.
Filled.
This is a pretty pocketed support here. You can see it right here on the 5-minute. This is a pocketed support area of interest for buys. See if we can the price action can step in. Huge pocket of support there. Flipping. Dicey. Real dicey. Real dicey price action. One account I closed for in the red, just very slightly today, $80 to $8. Another account's in a live position right now that I bought below the support of 200. The reason I bought below the support of the 200 level is because I gave myself a little bit of a pocket, right? I don't usually buy inside on the lines, but if I see price action start to extend down further into this pocket, what it gives me is a little bit of leeway to kind of get into a better price position so that I don't see it stopped out immediately. If you would have gotten in this position right now with a 50-point stop loss, like right now, that's ugly. We don't want to see something like that happen, where it just priced me out of the position, right? Now touching the bottom of my stop loss, right? That's an ugly position to be in. Typically what this is called is stop loss hunting. Market makers know exactly where stop losses are. It's in trading data that's sold to them by brokerage firms. So it's possible that a lot of people just got stopped out right there. I don't keep a hard stop loss sometimes, and my hands are like calm as a clam right now, because this is normal. This happens in the markets. You get a shooting star or a pattern that just shoots it back down into that loop where it just touches your stop loss. You get frustrated, then take another position. Confirmation here would be key, right? We want to talk our way through this position, but we ultimately want to keep a hard stop loss, which mine would be at 25,030. Now, price action should stop at a position where you have to get out of the position no matter what. It's just not a green position for you. Yeah, we're breaking further. just want to do a last check before I exit this position. So I got some time. Bloody. It seems that AVGO is pulling us down, Google is pulling us down, Tesla slid heavily, Nvidia slid heavily as well. I think the Fed chair is speaking right now, that's what it is. That is correct, Fed chair is speaking right now, it's at 10:30. It's not live.
Thanks, Emma.
No. Old video. Alright, so the next thing to do is just to chart a new level. Where is the next level? It's kind of in the 55 area. We'll see what it does. Charts are looking bloody today. Choppy. Choppy, choppy, choppy. Rather keep my eyes on gold for now. We'll move markets. I know that's not really in my trading plan, but when it's just like ugly like that, sometimes it's better to not look at something like that. I've already taken a loss on it, so might as well just step back. In fact, that's what we're gonna do. It's already 10:30, so I'm gonna take a step back from the markets. Today was just a loss. Happens. Don't know what to tell you guys. Can't be right all the time, so this is a good trading practice. Once you take a loss, just to take a step back and come back to the markets maybe in a couple hours, see if the markets can present another opportunity for us. Talk to you guys through the short. Tried to pick the reversal at the wrong time, and ultimately I paid a little bit of the price for that. So I'm gonna go ahead and take a moment, take a breather, come back to the markets at a different time, and hopefully there's a different story, a change in story for us. I'll see you guys later. See you guys tomorrow. If I do post anything, it will be on my X.